Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that markets seem to have exhausted their 2019 enthusiasm already. Firstly, Wall Street is losing faith in the US administration. Equities are down 1.4% so far, and the most in 2 weeks, as investors grow anxious that the US won't reach a deal with China before the March deadline for escalating the trade war. Treasury yields are tumbling. The State of the Union speech has failed to inspire anyone. All this follows a sharp sell-off in Europe overnight. The German market was down 2.7%. Some of that is a reaction to very poor German industrial production data. Market expectations were undershot in a confidence-sapping way, and those expectations weren't high to start with. And there was nothing in the EU's first 2019 economic bulletin to encourage investors either, in which growth forecasts were revised lower, especially for Italy and now Germany. In India, the new governor of the Reserve Bank, appointed to be more amenable to the government, has delivered with a surprise rate cut to 6.25%, just ahead of upcoming national elections. Yesterday we reported weakening December air freight markets. Today we can report that the passenger air travel market is much stronger, but its growth is slowing. December rose 5.3% against the same month in 2017, the slowest year-on-year pace of growth since January 2018, and a continuation of the trend that saw demand growth decelerate to an annualised rate of 5% over the second half of 2018, compared with 9% pace in the first half. Asia-Pacific markets are doing better than most, however. In Australia last night, both the chairman and the chief executive quit at the National Australia Bank, the two biggest scalps of the Hayne Commission so far. Investors may be surprised they had bid up the NAB equity price by 9% since its pre-Hayne low. Of course, now these two lightning rod positions have been culled, that share price may move sharply higher again today. But despite its car crash attractiveness to headline writers, arguably the bigger news of the week is the RBA's turn to the sharp dovish positions. That has reset local market fundamentals far more. The US Treasury 10-year yield is lower today at 2.66% and falling another 2 basis points from this time yesterday. Their 2-10 curve is now just on 17 basis points. The Australian government 10-year yield is at 2.09% and another big 8 basis points retreat overnight. Remember, this was 2.25% at the start of February and 2.75% just 90 days ago. That is a very big reset, and there is no way to know it's over yet. The China government 10-year yield is unchanged at 3.15% because markets there are closed, of course, while the New Zealand government 10-year yield is at 2.18% and is also down sharply, down 6 basis points in sympathy with the Aussies. Also dropping sharply are local swap rates, which will start today down about 10 basis points, and that's lower across the board and hitting new all-time record low levels for all terms except the 10-year, and that is close. Gold is now down $2 an ounce to $1,310 an ounce. US oil prices are sharply lower today, down another $2 a barrel to $52 a barrel, while the Brent benchmark is just on $61 a barrel. And the Kiwi dollar will open today at 67.6 US cents, representing a slight softening overnight and embedding in the 1 cent drop earlier in the week. On the cross rates, we're now at 95.3 Aussie cents and 59.5 Euro cents. That puts the TWI down to 72. That was 90 at 9, brought to you by interest.co.nz.